You know, the big anxiety in the days leading up to the IPO was this great rebalancing of the passive funds because NASDAQ, Russell indices fast-tracked SpaceX's inclusion. It's day 2. Shares are still higher. But how much does the market need time to digest before it has to undertake that rebalancing?
It's a great question, and that's exactly the point. You know, this issue of all of this issuance hitting the market doesn't happen all at once. You know, relative to the size of how much supply of SpaceX there will be in the market right now, we're just looking at a small fraction of it, right? 4.5% was that first day's volume, and that's going to ramp up over time. We think that 6-month mark is really going to be the point where you might see more volatility just given a greater supply in the markets, and then that increasing over time gradually over the course of the year, particularly given the S&P taking a more temperate pace there. But given that longer term horizon, I mean, that's key here. You know, this is a market where we are looking at a large bump in terms of IPO issuance this year. This year projected around $260 billion. But for a market the size of $65 trillion. That is less than 1% of the overall market cap of the market, a market that is also 55% greater than it was in 2021. So we think so long as the market continues to trundle along here with robust fundamentals, we just had a really solid earnings season. This AI CapEx boom continues to funnel earnings growth and revenue growth across the market, and households remain pretty strong buyers. Retail activity is strong. We think that this is a market that can digest this increase in issuance, and it's issuance that we have really been strapped for a number of years.
I want to go back to something we showed on the screen a minute ago, and it's basically more of an FYI that in the end, they sold more than the 5.6 million shares and raised more than $75 billion, right? This is basically an instant exercising of the green shoe, 83.3 million shares, raising proceeds of $85.7 billion. This has been a story that started about a race to IPO, SpaceX and now likely Anthropic and OpenAI, and it quickly changed to a story about race to capital. Alphabet came in, massive equity offering, NVIDIA tapping the corporate bond market. Do you see a race to capital?
I think the economics around the AI boom continue to mount. Now, obviously, these companies are all in different pieces of this value chain and are raising capital for a variety of different reasons. But it is something that investors are going to have to get used to, I think. You know, as great as the balance sheets of some of these companies are, this AI wave is just getting to be that much more expensive. And all of the revenues around AI will eventually come, but this is going to be a multi-year phenomenon, and right now we are ramping up to spend significantly more around AI infrastructure and all of these different pieces of the value chain. I think that points to the need for selectivity. Not all that glitters is gold. These companies do vary in their financials. We think at large, the fundamentals of this market and of the companies, you know, spending the most and raising issuance in various markets is still robust, but you want to make sure in your portfolios that you have some proper diversification, just given that, you know, the leverage and the economics around this AI wave are definitely beginning to diverge.
Stephanie, we've just got 30 seconds, but how closely are you tracking private markets? Because there are competing stories, right? There is also the staying private for longer because you can. Like, how much do you track that?
Yeah, well, we think that that theme is still very much alive and well. I mean, you are going to get, likely, some big high-profile AI names, but the IPO markets are still going to be very selective. And a lot of the companies building in this AI race, whether it is robotics or even semis, but also particularly the application layer and building AI for healthcare, AI for logistics, all of those companies are in private markets right now. And of course, not all that glitters is gold. Right. I mean, market returns there can be quite volatile too. But when these companies eventually reach public markets, a lot of that growth has already happened. And that is a reason for investors to make sure they're looking beyond just public markets in their portfolios.